Reaching your first $100,000 is no joke and by no means an easy thing to do. Building wealth in general is a very long and tedious process, but the first 100K is especially a struggle. And Charlie Munger, the right hand of Warren Buffett, who unfortunately recently passed away with a net worth of more than $2.3 billion, he has a very famous quote where he says, "The first $100,000 is a bitch, but you gotta do it. I don't care what you have to do. Find a way to get your hands on $100,000. And he's basically saying that getting a net worth of 100K by any legal means necessary is super important. And the reason is that your net worth completely explodes after the first $100,000. And speaking from experience, as someone who's trying to reach their first $100,000, then I can definitely say that Charlie is right. So far, the journey has been a real grind. And that is exactly what I'm going to be talking about in today's video. Why the first $100,000 is so difficult to get and why things get easier after that. And I'm also going to be sharing a few things that you can do in order to hopefully get six figures a lot faster. But before we get to it, then in case you're new to the channel, then my name is Casper and here we strictly talk about investing and personal finance. So if you really like investing and you want to retire early, well then press that subscribe button below. And now back to it. And the reason why the first 100K is such a struggle is because what's going to move the needle is not going to be your share price returns, unfortunately, but it is most likely going to be your deposits. It is going to be whatever you deposit into your portfolio. And that also means that you have to do all of the work yourself. And that is also the case for me as well. It has taken me just below 3 years to build a portfolio that is now worth $50,000. And I have put $34,000 into this portfolio myself, and 15,000 of them is my share price return. So in terms of reaching that six-figure mark, then have my own deposits contributed a lot more to my total portfolio than what my share price return has. And I'm pretty sure that this is or was the case for you as well. And that is what makes the first $100,000 such a difficult thing to get, because your portfolio is not yet in a place where the compound interest rate have a significant impact, and therefore you have to do most of the heavy lifting yourself. But you gotta start somewhere, and even though the share price returns may be low, then you still have to keep investing everything that you possibly can into the stock market. And let's just take a look at an example of how long it actually takes to get $100,000 using this very simple compound interest calculator here. And if you were to invest $1,000 per month for the next 7 years at an average yearly return of 9%, then you will end up having just above $100,000 within the next 7 years. And out of those $100,000, then would your own contribution be roughly $80,000 to $85,000. So the majority of the $100,000 is definitely going to be coming from your own contributions. So now that we know why it is so hard to get the first $100,000 and how long it takes, then what about the next $100,000 and the next one after that? Why does it become easier? Let's start by the why. And to answer this, then you have to think of your portfolio like a snowball going down a hill. When the snowball first starts, it's very small, but as it continues to roll, it accumulates more and more snow, which in your case would be all of your dividend income and the share price returns that you get from your investments. And the bigger the snowball gets, the more snow it collects. And as it just continues to roll, then it's sort of like a never-ending effect. And the same goes for your portfolio. Compound interest is something that just keeps on rolling. It keeps on getting bigger and bigger. And that is exactly what allows you to compound your portfolio at an increasingly larger rate. And putting this into practice, using the same numbers as before, then getting the first 100K takes 7 years. And doubling your portfolio to 200K, that takes 4 more years. So that is almost half the time of the first 100K. And at this point in time, then will your compound interest really start to kick in. And out of the first $200,000, then there's roughly $70,000 coming from your interest gained on your investments. And looking even further ahead, then it's only going to take us 3 more years to go from 200K to 300K. And it's only going to take us 2 more years at that point to go from 300K to 400K. So you really start to see how the compound interest here is working. The snowball is just getting bigger and bigger, and you don't have to do all of the work yourself. And at this point in time, then will your snowball have become so big that all of your interest gained will surpass all of your contributions. I don't know about you guys, but seeing those numbers gets me really exciting. and knowing that my portfolio is only going to grow more and more over time gets me really motivated to keep on investing every single month so that I can finally hit that $100,000 mark. And I think that most of us are really trying to get to that mark, to get to the first $100,000. But the truth is that investing might not be the best and the fastest way of getting there. The fastest way is by finding some ways of increasing your income. And that is because most of the first $100,000 comes from your own contributions. So find a way to increase your income while not having more expenses will be the best and the fastest way of getting there. But until you get to that point where you have $100,000 invested, then will your share price returns and your dividend income not move the needle a lot. But that doesn't mean that you shouldn't be investing. You should still be investing everything that you can, and you should be investing every single month in order to maximize all of your profits. But once you finally get there, then it's gonna be really sweet. But I think this really speaks to the importance of investing when you're young, when you have time on your side to build up that portfolio and get that snowball rolling, and then enjoy your life once you get older. And time in the market always beats timing the market. The only thing that you're ever gonna hear from every single investor out there is that they wish they would have started investing sooner. I started when I was 25 years old, and I wish that I had started sooner. So if you haven't started investing yet, then get started. It is super important. And that was basically all I had in today's video. Thank you for watching the video. And if you actually liked the video, then don't forget to press the like button below and subscribe to my channel for more weekly content just like this. See you guys in the next one.